All right, so we're just going to do a quick analysis. So let's go ahead and unsync that. Right now, we've had multiple tests on this weekly close resistance that's been resistance for 1 week, 2 weeks, 3 weeks, and has rejected all three of them. We're pretty much in a no man's land between support here, which got broke to the downside, which we're currently retesting this week. We're rejecting off. This is a supply zone candle right there. But this was a gap fill right here on the H12, I think. Yep, and it filled it completely, so we could pretty much get rid of that. But the weekly supply is here, so the more we reject from the supply zone, the more the buyers are getting trapped and absorbed by sellers, because the people offloading at this price is creating supply, and that supply will create momentum. But we closed below this support, this down candle close. On the down candle, the close is on the bottom. On the up candle, the close is on the top, like we see here. And we just look for the one that it's respecting, and it's respecting this one. And this candle was being respected for 1-2 weeks. The third week broke it. Now we're coming into this current week, and we're rejecting off this moving average channel high, and it looks like it's going to be respected. Currently, so moving to a smaller version, we did the same thing. Up candle before the downswing. The up candle close is our resistance on the daily, and this is more to just get an intra-week bias. So based off today, we got rejected on the previous day and today on trying to push higher. On the CPI day, we got rejected, and then on the Fed funds rate day, we got rejected. So it almost feels like we're rolling over to where these bulls, everybody that's above the 150, that's above the 24 moving average, has a real chance of getting trapped as a bull. It's a trap for bulls, a bull trap. So, and those bull traps have happened here. It's happened here. I mean, technically you could call this the first bull trap. But this is a bull trap in the making if we end up getting below the 150. And it doesn't have to be the 150, it could be the 200. I just like the 150 because it happens to be a multiple of the number of trading days in a month. 24, let's see. We look at the calendar. So 1, 2, 3, 4, 5. 5 times 5 would be 25. 1, 2, 3, 4. So 5 times 4 is 20. So roughly 22 days in a month. I'd like to do 24. And 24 times 2 would put us to 72, roughly. 24. No, but it's times 3. Forgot my math. 72, and then 72 times 2 is 150. So, and that's more of a 6-month bias. 150. 72 is a 3-month bias, and then 1 month bias is like 24. So that's why I like the 150. For the most part, it's just around about 72 times 2. It's more like 145, but I like 150. And then, so we're in a possible bull trap, and we're going to find out probably near the end of the week. Currently, it's really good to short. It was really good to short here on a reclaim. So on this day, whenever it came back down, that was a good point to short, especially also on the previous day close. When it came back down, it was a good place to short. Very volatile day. I mean, I couldn't keep up with it in futures. It was even more hard to follow today than it was yesterday. For some reason, the liquidity is really thin. Like there was it was like nothing on the footprint. Like this is 15 range. So this is, I mean, currently it's saying that 1550 is now. So roughly 4 hours from now, like, I think it was at 2, so 3 hours. So 1250. I mean, look at this on the footprint. So just even here, okay, let's get to like 13. It's terrible. Okay, and this is what I'm saying. Like when you look, I'm gonna zoom in. Okay, when you look at this footprint looks like there's nothing. It's like no liquidity. This is manipulation. Like these numbers are so small. We're supposed to be seeing triple digit numbers here. And usually, I wish I could show you yesterday's, but it was almost, every candle was almost, it was very full. Like I think it didn't start getting more full until later part of the day. I'm going to see if I can find you a normal example. This is more like a normal example of a normal candle. But look at this. Like this is like nothing. This is like nothing. This is like nothing. This has got some, but that's like almost nothing. Like there's like no liquidity. This is all manipulation right here on the footprint of just the contracts. There's just bots or whatever, and the banks, they're just moving it up and down, up and down. They're just trying to buy time to just decide on what to do, how to position, and get their finance team in. This is what a normal candle looks like on a typical day. Like these are what it looks like on a normal trading. But as you can see here, like when we go closer and closer to the CPI or the Fed funds, when it came out, this is what it looked like. It was like nothing, but it was moving like wild. So it just meant like, I don't know, like not a whole lot of, I can't figure out what would make the market do that. You know, there's not a whole lot of contracts being traded. But what is it called? During the CPI reading, it didn't look like that. It looked like, it looked like the regular bars. Like this looks like it's normal. This is what a normal reading would look like throughout the day on each candle. It would be very full, almost triple digit on each candle. And this one's got 4 digits of contracts, but still, like it's crazy. Today was just not fun. Period. Near the evening, you know, it was not an optimum hour to trade. If anything, you know, it was just bots from the banks to just trade on the news and just keep it going sideways for the morning session to happen, because everybody probably went home at the banks. They probably didn't wait at home at the office for the reading, maybe just to see it, you know. But like I think nobody was probably in the office. But that's the S&P 500. The overall story is that risk to reward, we're near a place for shorting, and the reward is to the downside. So it makes sense that we want to short it, just because we're so close to where we're overbought, and we're rolling over. We have a deviation, left shoulder, right shoulder, and it's time for it to come down. And we're just kind of watching the MACD, waiting for a daily cross and a weekly cross. All right, oil. This one closed above this broken support, and it reclaimed it. So, I mean, that's cool. I'm not too surprised by it, and we're waiting for a retest on this to see if it holds. If it holds and it starts to move higher, then it might be a problem. If it breaks down, then it's not really a problem. I mean, we'll look at the S&P 500 here. We finally got a retest on this H4 breaker to the upside. So, I don't know, I expect some kind of like topping formation, like slowly rolling over. Maybe we get another swing high here. Who knows? But it looks like we're slowly rolling over. Maybe we'll touch the monthly open one more time. That's kind of where I would like to short. Like peak above the previous week high, come back below and short, or touch the monthly open and short. But that's what I would like to do. But for the most part, we were able to get that short to the downside, retest that H4 breaker, and then now we got this H4 breaker following us. And then oil, we had a break to the upside, but we never really tested this breaker. So that's kind of, we're into a weekly breaker to the downside at resistance. So that's kind of why I'm holding my shorts right now in oil, just because it's anyone's game. Anyone can win this. And fundamentally, I say the fragility is still there, and the risk is to the downside. It's a Skittles freeze pop, by the way. But I know we just came from weekly support, but still, with the weekly breaker, I mean, come on, like we're right into the weekly breaker. I'm not giving up on that weekly breaker just yet. I need to see a capitulation move for the bears, and specifically a weekly close above this level. We get a weekly close above that level, then I capitulate. If we, and it's all about those weekly closes. So two more days, and then we'll get it. All right. Now we'll take this to the credit spreads, and then gold, and then Japanese yen and VIX. So on the weekly, we're just chopping and consolidating, like coiling. Those are good adjectives. On the daily, this is kind of where our analysis comes in. We broke this level this week, and we closed above, and I said we're gonna now test these highs. We tested the high, and we formed a deviation. We got rejected, and today we totally came back. Now it's time to test where we broke and to see if it holds. If it holds, then that's good news for us. If it doesn't, we're going to fill this gap and possibly trap some bulls and create a bull trap and get into underneath the 150 and underneath the 72 and get back into a bear trend, bear channel on the high yield growth credit spreads. LQDH, very similar, but you could see a real deviation right there. There's the deviation. Bulls were wrong, closed back below. Deviation, left shoulder, right shoulder, I guess. But it's basically a sign of weakness. Now we got to go test support and see if we close below on the day. But now it's really good to short, and it's both good to short HYGH and LQDH because we're going to be going testing daily support on both of them. And Lagarde speaks tomorrow, so it's going to be important for risk on for the euro. And the euro, whenever the euro goes up, then the S&P 500 grows up for the most part in the correlation. And then when it comes to market structure, credit spreads, we can't see it here. It says it's bearish on the H4, so I mean it makes sense for where it closed. And then we're waiting for the close on the week, but we're chopping LQDH credit spreads. As far as like on the week, it looks like we're getting rejected off of weekly resistance on both this high weekly close and this high weekly close, and we even though we broke out above, we could be returning back to that area for a huge rejection. So we're still bullish on the H4, but we see this weekly H4 breaker that's untested. It's going to want to come back there. And then this H4 breaker that's untested, it's going to want to come back here too. And it looks like this was the candle that broke it, or this candle. But it doesn't look like it really retested. I'm not 100% sure. But, and then there's another one. But, I don't know, maybe this one says this is the candle that broke it. I feel like this is the candle. I don't know. It's weird. But it looks like those are untested. Now, going to Japanese, we'll do the VIX and then the Japanese yen. All right, so weekly resistance right there, weekly support right here. All right, so right now it makes more sense for support, and we're gonna see how it goes. Let's see right here. Go to the VIX. Looks like it went all the way down there, and it closed the day. So it looks like equal lows. So that's good as far as support. We didn't close the day below. Now when we look on here, yep, looks like it acted as support on the day. It had to come all the way back, but it really did max pain on that. And then as far as like resistance, that's resistance right there on the day. And we have a huge range, but we're at support. So we'll see come tomorrow if we shoot back up and we fill this fair value gap here on the day. This daily fair value gap is likely to be filled. And we could pull back into it pretty hard. But we got a huge range. We're at support, daily support, weekly support. And it makes sense that it could get bought up. And we're going to see where it lands. And when we look at here on the VIX for Pepperstone, looks like we got an H4 breaker to the downside. And we're waiting to see how that plays out. We also had a weekly breaker to the downside according to this. And we had a huge retest. We wicked above the previous wick high on the week. And then we sold off. Another big engulfing, so a lot of like indecision and chop. We could continue down, but the week's not over. You know, we could have like a huge like pullback. Who knows? But it sounds like right now there's a potential reversal to the downside on the VIX for low volatility, and we're gonna have to continue to monitor this and see on the weekly close how it turns out. But with the a daily equal low, I'm optimistic that it could gain support and rally again. And then Japanese yen. closed above this and broke this weekly resistance on this up weekly close. It broke this up weekly close on this candle, and then now this is resistance. And we came back for a retest. We came back pretty far, pretty deep for this retest, and then now we're kind of in this no man's land, and we're wondering if this week will be support right there. And that's kind of just the question: is that going to be support on the weekly close? And on the day, this is not the day. So it's marked in already. On the day, with this down bar before the upswing. I mean, it's not a real upswing, but as far as a reclaim, this we closed. This was supposed to be support. It was it for one bar for one day. The second day we closed below. The third day we reclaimed by closing back above this support line and retesting it today, and we closed above the line. So it looks like a full reclaim. So now we got to see if we close above this line, 18.4. But this reclaim is a really healthy sign for the Japanese yen. It's a really bad sign for the markets because it's a sign that people are seeing fragility in the system and they're willing to hedge, or they're willing to speculate that it's bad. And we got to see on the weekly close where we're at. But I mean, for the most part, for the VIX, we've had a daily breaker to the upside. I know we've kind of engulfed this breaker, but for the most part, as long as we have weekly equal daily lows on the closes, we're golden, and this could rally back up. It has to do a lot of work, and it's got to close this H4 breaker to the upside. There's an order block right there, bearish order block right here, and it's got to do a lot of work. But we'll see what happens. But the ones to be watching is definitely credit spreads, Japanese yen, VIX, and the euro. Right now, it looks like, for the most part, they're all saying the same thing. On the weekly, it looks weak, and there's a reversal happening. Japanese yen reversal to the upside, VIX reversal to the upside with the daily breaker to the upside. We're doing a really deep retest, and then credit spreads with a possible reversal to the downside on both high yield growth credit spreads, corporate credit spreads, both failing the weekly resistance and daily resistances, and forming deviations or swing failure patterns. And then the same also with the VIX and the Japanese yen. For the most part, we have to see how it closes on the week. If anything, on the VIX on the week, it could be just some swing failure pattern, equal lows right here on this previous week low, and at 22.61 to where we head higher for reclaim at wherever this level is. Oh, it would be right here. Around 24.99, around 25, 24. Alright. And then Japanese yen. We're so close. Bearish order block. We just need to get above. Close on the week. We broke the bears on the Japanese yen. Risk is in the system, and it will be declared once we have a breaker on the week for Japanese yen. This is the thing that people aren't really talking about, is this Japanese yen and the point where it's really trying to break on the weekly, and that would be a big deal. Euro wise, we are we are above weekly resistance. We're getting Christine Lagarde speaking tomorrow, and that could break all of these order blocks, the H4 and the daily, on the same day, and that would be a lot of momentum. That would be a lot of breaking of market structure. That would be a lot of bulls trapped. So just saying, all the bulls jumping off at once would not be a pretty sight. And it looks, stairs to the top, elevator to the bottom, kind of deal. Just got to mind your risk. So that's pretty much it as far as like macro. And I showed you here on MetaTrader just what I'm seeing. What I'm seeing as far as like a trade plan. I'm not gonna the rest of this week unless we get an H4 breaker. I'm not gonna touch it. Right now we're coming into Thursday, but it's another news day, and this news day for the Fed funds was at 2, and it was just I showed you the footprint. The footprint looked terrible, and I don't know why I even tried trading it, but I tried it and I instantly regretted it. Like out of the 9,000 I got yesterday, like 8.7, I gave back 1,000, and that's now biggie because I can always get it back the next day. But when it comes to Thursday and the news, I guess maybe they're going to do the news during their time, and it might be beneficial during New York Open. So I might trade tomorrow. We'll see how the footprint looks, and I'll be looking for this H4 market structure break for the most part. This H4 market structure break will be really big in terms of like a rollover on the S&P 500. If it doesn't happen Thursday, if it doesn't happen during the open range breakout, then I'm not going to be putting up with it. I'm going to be going low risk for the most part, and really just scale in for positioning, and just treat it really slow just because it is a high impact news day, and we'll see if we get more of the same of that just weird kind of manipulation of the footprint. But I'm looking for this H4 to break, and then we could see here on the MACD on the bottom, we are pinching. We're getting closer and closer to crossing on the weekly, and we're really close to crossing on the daily. And that's kind of just what we're waiting for. We're waiting for the momentum to really kick in, and I think we're going to maybe attempt to go up again and possibly come up into H4 supply or H4 resistance right here, and we'll see what happens. But I think we're definitely going to revisit this area, and maybe we'll use this one. So we'll see what happens, but I definitely think we're going to try. Maybe we can, it would be this one, and then possibly this one. That worked for resistance on this candle, but reclaim on a breakout, and then this reclaimed it to the downside. So we could test this area, or we could just stop here. So that's kind of just it on just the analysis. Fundamentally, things look bearish. In terms of money flow, it looks bullish, or actually it looks like it's in the middle. In terms of the timing solutions, looks like there's divergence that's happening, and there's no edge here. It looks like it's in the exact middle, and there's no edge. So for the most part, just go low and slow. We're waiting for the weekly close. If we get an H4 breaker, we got a little bit more clarity that we can work off of, more of a bias that we can work off of. It's just getting a good entry. And if we end up going outside the I guess first 3 hours of the New York Open, then we're just gonna have to put it down, wait for the next week. There's always another trade, and we just can't depend on it falling apart this week. They might take it into Friday and just really mess with it, but we're gonna be waiting till Tuesday next week to trade again, to really get involved. We could try Friday or Monday, but I got to do more back testing if I want to do that. But for the most part, I don't feel comfortable with trading Monday or Friday. Anyways, that's the assessment. Thanks for watching.